Welcome to The Explainer. So today we're diving straight into a massive question for, well, one of the biggest companies in the world. You see, while its rivals are posting these incredible, record-breaking profits all fueled by AI, Apple's recent success, it's been met with a bit of a shrug, which leads to the big question, can Apple actually buy its way back into the AI race? So here's how we're going to break it down. First, we'll look at this huge divide that's opening up in the tech market. Then we're going to zero in on Apple's really strange situation and its potential shopping spree solution. And finally, we'll get into the hidden costs and the messy global picture that makes this whole thing such a high-stakes gamble.
All right, so to really get a handle on Apple's problem here, you first have to understand just how much the tech landscape has changed. It feels like overnight, success is being measured with a completely new yardstick.
So on one side of this new divide, you've got companies like Microsoft and Meta. They are betting the farm on artificial intelligence, and boy, is it paying off. They're seeing massive blowout results. And then you've got Apple. Their performance, while it looks pretty strong on paper, is being seen in a totally different and frankly much harsher light. $400 billion. I mean, just think about that number. That's the rough scale of the AI spending spree that big tech is currently on. And, as the Wall Street Journal put it, this isn't some pie-in-the-sky gamble anymore. This strategy now has Wall Street's full-throated blessing because the results are already proving the enormous cost is worth it. Okay, so let's actually look at Apple's numbers, because this is where the story gets really interesting. In pretty much any other time, their latest quarterly report would have been a huge win. By any traditional metric, Apple had a fantastic quarter. iPhone sales shot up 14%, way higher than anyone expected. Their overall revenue was up almost 10%. In fact, this was Apple's best quarter for revenue growth since way back in December 2021. And for all that, the stock got a tiny 2% bump. So what gives? This quote right here, it just perfectly captures the new reality. It's basically saying investors don't really care about your core business if you aren't a huge player in AI. The game has totally shifted from shipping physical hardware to serving up AI tokens, which are basically the little units of data that AI models process. Right now, it seems like investors have a complete one-track mind. So all this puts Apple squarely in catch-up mode. The question is, how do they get back in the game? Well, during their last earnings call, they hinted at a pretty familiar strategy. Maybe they can just buy their way to the top. You had CEO Tim Cook come out and say, yep, we are open to mergers and acquisitions. He even made a point to say they've made 7 acquisitions already this year and that they're buying a new company every few weeks. He's clearly trying to push this idea that they can just purchase the innovation that they seem to be lacking. But, and this is a big but, the people who watch Apple the closest, they're just not buying it. Bloomberg's Mark Gurman points out that this is not a new line from Tim Cook. He said they're open to big deals plenty of times before, and it's never actually happened. In fact, their pace of making deals has actually slowed way down. This whole cautious, non-committal thing, well, it's led some analysts to make a really fascinating comparison. Tim Cook's public posture is starting to sound an awful lot like the Federal Reserve's chairman, Jerome Powell. When he doesn't do anything and just says, we're just going to have to wait and see. But here's the real kicker. This wait-and-see strategy comes with a staggering and rapidly climbing price tag. The longer Apple waits on the sidelines, the more expensive it gets to even have a seat at the AI table. I mean, let's just look at some of these price tags. Potential targets like Anthropic, Mistral, and Perplexity, their valuations have just absolutely exploded. A deal for Anthropic, which was already called a stretch for Apple back in March, is now rumored to be worth something like $170 billion. That's basically unobtainable. And others have jumped from single-digit billions to the mid-teens in just a matter of months. It's wild. And to really put that in perspective, the market leader OpenAI recently raised money at a mind-blowing $300 billion valuation. And its annual recurring revenue, that's projected to just blast past $20 billion. The window of opportunity for let's call it a relatively affordable acquisition, is slamming shut fast. So this whole problem gets even bigger when you zoom out, Because this isn't just about money anymore. It's about market control, and it's about geopolitics. 20 million. So what does this number represent? It's the number of all-time users that Microsoft's GitHub Copilot just crossed. And what that really shows you is the massive distribution advantage that Apple's rivals already have. They aren't just building the tech, they're building these huge embedded user bases that Apple somehow has to play catch-up to. And at the exact same time, the very hardware that AI runs on is turning into a geopolitical flashpoint. Chinese authorities are now investigating Nvidia's AI chips for, quote, serious security vulnerabilities. And that freezing, it has some very obvious echoes of the 2019 US ban on Huawei, which was declared a national security risk. And look, this isn't just some political theater. As one analyst from Forrester noted, this move could really hurt Nvidia's market share in China. But maybe more importantly, it could accelerate the rise of domestic competitors over there, like Huawei. This threatens to disrupt the entire global chip supply chain that Apple, and frankly, everyone else relies on. So you take all of this, the market just not caring, the hesitant strategy, the exploding costs, the geopolitical risks, and it has led some analysts to a pretty brutal conclusion. This AI gap isn't just seen as some temporary hiccup. It's being framed as actual evidence that Apple has fundamentally lost its innovative edge, its mojo. So that leaves us right where we started, with the central multi-trillion-dollar question for one of the most valuable companies on Earth. While all its rivals are sprinting ahead in an AI arms race, Apple seems to be just waiting. But in a market moving this fast and this expensive, you have to wonder if waiting is the riskiest move of all.